Welcome to Zero Taxes, Zero Fees. You, yes, you, are still paying too much to invest, but after watching this, you will know how to pay nothing at all in financial fees. Most people know that high investment fees and their unrealized returns can quickly add up to hundreds of thousands or even millions of dollars. In last week's video, we did a financial fee audit to ensure you are aware of the many different ways you might be paying financial fees without even realizing it. In the previous video, we prepared ourselves for zero fee investing by understanding all of the investment fees being paid and how that negatively impacts returns. If you don't know how much you are personally paying in fees and why it's a problem, be sure to check out my previous video on preparing for zero fee investing. In this video, I'll outline how to invest without fees so you can stop funding your financial advisor's kids' college. Make sure you watch until the end so you don't miss any of the techniques. I saved the coolest one for last. The information in this video truly is the best kept secret of the modern world, likely because no one makes any money off of it, except you. It is only in the past couple years that access to a wide range of no-fee investing options have become available. Since I called out financial advisors in my intro, I feel the need to address how to pay zero fees for them. It's actually one of the easiest steps with zero fee investing. If you are paying fees to have a financial advisor, all you have to do is get rid of them. Break up with them, fire them, whatever you want to call it. If you're the type of person that's going to outsource one of the most important parts of their life and pay someone else to manage your money, I'm not going to argue with your decision. You probably do need the help. However, since you're watching this video and taking time to educate yourself on financial matters, I don't think this is you. They don't do as much as they want you to think they do. You can find the fancy calculators and software they use online. You can learn just about everything you need to know by reading a couple books or watching some videos on YouTube. Although YouTube and books from the library are free, I'm all about paying for YouTube Premium and education. Those are fees I don't skimp on. If you want to pay somebody that will actually have a positive impact on your money, get a good accountant who gives advice on lowering your taxes. Once you've accumulated enough wealth, most financial institutions will actually give you one for free. I personally have two advisors, one from my bank and one from my brokerage. I don't pay a thing for either of their services. Are they great guys? Sure. Do I trust them to know what's best with my money and my life? No. And I'd be delusional if I thought they did. Will you make some mistakes along the way if you manage your own money? Absolutely. I know I have, but this is how we learn and grow. Financial fees have been dropping rapidly over the past 2 decades, and despite the inflationary environment will continue to fall, investors are paying roughly half of what they would have paid in fees on mutual funds and index funds than they were 20 years ago. The innovation and competition in the financial industry has been fantastic for retail investors. We truly live in a golden age of low fee investing. Investors now even have the option to invest in zero fee index funds. Zero fees are real and they are spectacular. If you have not heard about zero fee index funds, I'm not surprised. I'm not saying there's some big conspiracy to bury the existence of no fee index funds, but let's face it, your brokerage is probably not advertising them to you. No financial institution has any interest in promoting them, and for good reason. They don't make them any money. They even lose money on them. They are loss leaders to get people into the door so they can also invest in other products with fees. Index funds are also not a sexy topic. Most people know the smart and safe thing to do is to invest in low fee index funds, or even better, no fee index funds. But the topic is not nearly as exciting for the media to cover as the latest hot growth stock, crypto coin, or Reddit short. Although several financial firms offer zero fee index funds, I'm going to focus on the offerings from Fidelity, the brokerage I use, which provides the best zero fee index funds available. Fidelity's first fund, the Zero Total Market Index Fund, was launched in 2018. Today, Fidelity offers 4 zero expense ratio index funds. The Fidelity Zero Large Cap Index Fund is similar to the S&P 500 Index Fund. There are some slight differences to a true S&P 500 index, but it does track the 500 largest stocks in the United States. The Fidelity Zero Extended Market Index Fund invests in 2,500 mid to small cap U.S. companies. The Fidelity Zero Total Market Index Fund is a combination of FNILX and FZIPX, tracking the largest 3,000 companies in the United States. The Fidelity Zero International Index Fund tracks mid to large cap companies located outside of the United States. The index holds around 2,300 companies from around the world. While it does not have large exposure to any individual stock, its top holdings include Nestle, Taiwan Semiconductor, Tencent, and Samsung. These funds are still relatively new, so it's hard to see how they perform compared to alternatives. FNILX, the S&P alternative, has actually slightly outperformed a true S&P index. This may be due to more frequent rebalancing. It's possible the fund is adding and dropping companies faster than the S&P 500 indexes, giving it a potential advantage. The other funds seem to have lagged the indexes they're designed to track. This could be due to the smaller number of stocks they track. There could also be slightly more variance due to the lower market cap of the fund. It's still early to say definitively in either case whether there is any inherent advantage or disadvantage to the design of these funds. It's important to note that these funds are mutual funds. They tend to be less tax efficient than ETFs, so it's better to utilize these in tax sheltered accounts. You must have an account with Fidelity in the United States to invest in these. The Fidelity zero fee funds are available if you have a 401k, Roth IRA retirement account, or a health savings account with Fidelity. The zero fee index funds will be the most efficient in these tax sheltered accounts. As an added benefit, you can make changes to your existing investments in these accounts without triggering tax liabilities. So even if you have investments in another mutual fund or ETF with significant gains, you can easily shift the investment to a zero fee fund. Once trading fees went to zero, stocks became the ultimate zero fee investing vehicle. As far as fees go, if you buy and hold, stocks can't be beat. Zero fees to buy, zero fees to hold, and long-term capital gains on dividends. The one problem with stocks is that they can be hard to diversify. Although you can now buy fractional shares, no one wants to sit on their computer or phone entering dozens of tiny orders each time they have money to invest. There is a zero fee option for creating your own ETFs. Well, almost free, that is. For $4.99 a month, Fidelity offers a feature called Fidelity Solo Fidfolios. I know, the name's a confusing mess, but it allows you to create your own index of stocks and mimic ETFs. With a single purchase, you can buy a basket of up to 50 stocks that you handpick. You can buy fractional shares. The minimum investment is just $1 per stock. You can create as many of these baskets as you want. The 50 stock limit will stop you from creating your own S&P 500 index, but it's a great way to diversify and keep your investments more consistent across your portfolio. It's also great for thematic investing. Now you can make your own metaverse ETF without the high fees. While the monthly cost is far from free, it's much lower than you would shell out if you had a decent amount of money in a thematic ETF. So, what do you think about no fee investing? If you have any other tips or tricks for reducing financial fees, drop them in the comments below. Be sure to subscribe. Next week, I'll cover additional zero fee investing tips and walk you through the most efficient way to move existing investments to zero fee investing. If I go missing before then, search the brokerage firm with the highest fees.